Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, February 24th. Hope you guys had a wonderful weekend and staying warm back east. Today here is beautiful in SoCal. We had a wonderful weekend. Jump right into it. We just got one economic news release today. We do got some important ones later in the week. One of the big ones will be Friday with the revision for the GDP. So this will be the second revision, and then next month will be the final revision for the fourth quarter on there. So we'll have to kind of wait and see what that translates. But jump into it today. We had the market flash services. Last week we had the market services PMI for the manufacturing. This is for the services industry for the month of February. So January we had a 56.7. Anything above 50 is considered expansion. So we had a decent expansion in the month of January. So the month of February still expansion, but much decrease. We dropped 4 points out the index, so pretty big jump right there, down to 52.7. So it's something we have to definitely keep an eye on, as we have seen some numbers that kind of come up. But of course, a lot of the investors are kind of shrugging this off due to weather. But we'll have to kind of wait and see if anything can necessarily be blamed on weather. So let's go ahead and jump into the headline news. And right now, the stock market is looking great. The Dow is up about 180 so far this morning. The rest of them, the Nasdaq and S&P, were both up as well. So we had a kind of a week in losses for the stock market last week. This week it's starting off pretty strong. So basically, what it's telling me, even though we had negative news there, they're cashing in and cashing in on the profits right now. Now we also had a comment by Fed member Fisher, and basically he just basically stated his opinion that he's in favor of in the tapering, basically, that he's out for 10 billion a month basically for the rest of the year. So and then basically he also kind of made a comment that there are some shortages of labor in certain areas or regions of the U.S. as well. So where a lot of people are just off the numbers and not looking too good. So, but I guess there are some areas that are short. So let's go ahead and take a look at the bond market, see what interest rates are doing so far this morning. We took a turn for the worse, primarily because stock market's up, so that money comes out of the bond market, which is typically a place for flight to safety because it's a lot more conservative, a lot more safe versus the equity market, which is a little bit more volatile and higher risk. So that money comes out from the bond market, which is translating into higher pricing in the interest rates where we are. So last Friday we had a nice rally. We closed up at 104.28, created a new ceiling and floor for ourselves, which is great. Even brought us all the way back to the 100-day moving average, to that that whole combobulated area there. And then we came to so right now we're down to about 104.09 versus 104.28. So that's a good 19 basis points from where we left off on Friday. So that translates to just under a quarter point for a no point loan that was on Friday. All right, folks, have a wonderful day. Again, we do got some high impact news later in the week, so be cautious this week. Janet Yellen is also going to be testifying before Senate this week as well. So comments that she makes could obviously, make the markets move as well. Thanks for watching. Hope you guys have a wonderful day, and we'll see you guys again on tomorrow.